come out with those new ideas which can help our startup ecosystem. Similarly, these startup studios, they provide a pool of resources. They can be expert from different fields, and they can actually share their resources, their expertise, and also the finance to help these startups to make their own strategies, the management processes, and things like that. So I think the startup studios have a way to go, and they are the something very unique. You must remember that they don't work on cohort basis. Cohort is, we all understand, is a where just people assemble, uh, you know, and discuss their, uh, who are like-minded and discuss their problems and issues. But they are not accelerators or incubators, but they will partner just like investing co-founders, and they work with hands-on style and expect equity in return. So this is the interesting part to understand, that what these studios they do. They actually identify these disruptive ideas. They get into these ideas by investing, giving them space, giving them all the support, but at the same time they look for substantial chunk of equity as compared to what the incubators look at. So these studios have a very unique model, and it might not be only founders they are working with. uh, the they must be developing some ideas or businesses simultaneously, and also the style of building businesses is called parallel entrepreneurship. You must have seen on LinkedIn, some people write themselves as serial entrepreneurs. So serial entrepreneur is nothing but they invest in multiple businesses. So like that, these startup studios, they also get into parallel entrepreneurship, where they identify few projects and they work collectively on those projects, where the founders they are encouraged to set up their own uh, startups within that studio. So they are working in a as a common team in one place, like a company works, and they are individually managing those startups. Maybe they have collective accounting services, they have collective finance arrangement services, they have collective workshops, and whatnot. So you know mm, the at the startup studios, the other businesses are known as subsidiaries of the studio, where studio itself is a holding company. So I think that will make you understand how these studios work. So studios are a holding company, and they have various subsidiaries working under it. And just like other stakeholders, the startup studios exit from business when it is acquired, or when it goes public. So if you are coming up with the IPO, the startup studios will exit, and they take a back seat and may say that now you continue with your public investors. But they have a I think we all understand, they have a different model than the incubator or accelerator. Now let us look at more deeply how it is different, what are the differences, and what how we can take advantage of these startup studios. And those who are interested in setting up a startup studio, um, they also, I think, should understand this very concept very well, because this is something emerging very much in India. And as the startup ecosystem is becoming more and more stronger, I was looking at the DPIIT website of Startup India, uh, and the registered startups are touching 99,000 something. No? So very soon we'll see a figure of 1 lakh startups registered in India. So that's a huge number. I still remember in the middle of last year, it was somewhere around 66,000 or something like that. So, so the pace at which the startups are getting registered in India is also humongous. And, so the startup ecosystem needs more and more such startup studios which can actually come up and help the entrepreneurs. So incubators and accelerators, as I said, are cohort-based training and mentorship program. The startup studios partner with individuals, businesses, and work in co-founder capacity, and they get involved into the day-to-day working of the startup. So this is the difference, and the another major difference is the major equity demand, because in the case of a startup studio, normally 30 to 60% of the equity stake is demanded by these studios, whereas accelerators they ask for 7% generally, and incubators they don't ask for any equity. They are just there to support the startup ecosystem, so they just support them. And the accelerator and incubator programs are for specified duration, whereas startup studios they build startup from scratch, and they stay with them till they exit. So the journey of a startup studio is much bigger. They are they are there for a longer period of time. So that is why these studios are very much in demand, and they are there to look at the. So just a minute. Okay, let us look at these startup accelerators, incubators, and startup studios. So, as we discussed, what are the differences between them? Uh, this chart will make you easily understand how it is highlighted. So, basically, the purpose is, startup accelerator accelerates the growth of the startup, whereas the incubator assists in conversion of ideas into businesses, and the startup studio actively builds up the startups. The model is cohort based in both accelerator and incubator, whereas the startup studios they partner individually with the startups. If you look at the provisions, the structured training, networking, co-working space, and capital. These are the main, provisions for the startup accelerator. Whereas in case of incubator, it is the infrastructure facility, mentorship, and networking. And in case of startup studio, it is funding the human capital, strategic process, technical tools, and all the internal resources which are offered to the startups. So they are having much bigger role to play, and they act like a partner or a co-founder. So that's the basic difference between a startup accelerator and incubator and a startup studio. Uh, The state of joining, in case of an accelerator, it is after the team plan or MVP is ready. That's the place, that's the time uh, when you approach the startup accelerator. Um, the incubator can be approached after a valid idea is ready. And in the case of a startup studio, after a catchy idea is ready, you can actually approach them. You can make them partner to your idea and actually make them participate in your entire growth journey. So that's the time you should look for a startup studio. If you are looking for, if you just have an idea and you don't have the other resources, and neither you have a big money to spend in testing your that idea. So the startup studios come in very handy in that case, and they can actually be very supportive to you. If your idea is really good, it is really disruptive, they will definitely support you, and they will give you all those support which is required. The working time frame, the accelerator works for 3 to 4 months, whereas the incubator, from start to when they can start sustaining themselves in the market, and the studio works from start to the exit. So studio is like a co-founder, as we said. So I think it's well understood from this chart how all these three things are different. And sorry, it is run by a for-profit organization like established business or investment firms in case of an accelerator. In case of an incubator, it is not for-profit organization like academic or a government institution or any government aided or supported incubator. They are normally there to support the ecosystem, and they support all the startups. And these startup studios are actually run by serial entrepreneurs and corporations for profit, of course. Sometimes they take VC money also, and they work in a bigger environment. Of course, raising fund, the startup accelerator also raise funds. Incubators, they don't raise funds. They are there to support the system because they don't need to invest also. So they are just providing the infrastructure. Whereas the startup studio also raise funds. As far as the equity is concerned, as we just discussed, around 7% usually for the accelerator, incubator no equity, and for the startup studio 30 to 60% of the equity they normally ask. So that's the basic difference between all these three forms of startups, startup support systems. So I take a pause here and would request you, if any of you have a question, we can answer that. Yeah.
Thank you, Rajiv ji. Like, could you name some startup studios? For example, I'm in Bangalore. Some studios famous.
Ajish, Bangalore, there are a couple of startup studios. So I'll maybe send you some names, separately to your WhatsApp or whatever. I'll put it in the group.
Yeah, thank you.
Yeah. But there are few in Noida which I'm very familiar with. But yes, Bangalore, I'm sure there are a couple of studios.
So it will come in the like how, like in Bangalore, there are a lot KDM is there, like Karnataka Digital Mission, which is there in HSR layout. So they conduct such meet every monthly once. Startups, and there is also one more Thai Bangalore. They also conduct so much weekly events. But startup studios, I have not at all heard.
Yes. No, there are studios in Bangalore. There is one in Noida I'm aware of. It's a concept which has come from US. And as I mentioned, these studios are providing more of a co-entrepreneurship. So, for example, someone who is into startup ecosystem, they set up a facility where the startup entrepreneurs, they can go and work in a maybe co-working space environment. And these studios, they own normally those places, and they not only give them space, they give them mentorship, they give them funding, they give them all that financial support which is required, and also they work with them for developing that idea, and ultimately that idea becomes a reality. So they are not only working like a TIE Bangalore. You said TIE is a voluntary organization. It's a not-for-profit organization, and they are actually conducting events to encourage the startup ecosystem, right? Similarly, there are a couple of accelerators who are for-profit organizations, but they are not studios. They give them training or co-working space also sometimes, but they are not acting like a studio. Studio is entirely different, and it's better than accelerator, I must say. But they then ask for a bigger equity, so that's the difference. Yeah.
Hi Rajiv ji, Sanjay here.
Yes.
Great
Sanjay.
concept. Do the studios enter only at the catchy idea stage? Or
Yes. You complete your question, then I'll answer. Yeah.
I mean, like we have, started our journey and we are at a particular stage where we have some tractions or NPVs ready.
Mm-hmm.
So will they be able to enter in such a scenario?
Yeah. See, when I say they enter at a catchy idea stage is because they are, it is better to involve them from the beginning itself, no? When you are in this early journey of yours, because then you get all that support. And why I say catchy idea, because the studios are at that time you don't have even MVP, or if you have, it is better, no? But they studios, sometimes they look at the concept. If they find that this concept is going to work, because all these studios are run by people who are also entrepreneurs in their own right, so they are able to judge that what is going to be working and what is not going to be working. So that is why it is always better that you get into these studios in the initial stage, so that you can get that funding support, you can get that benefit of utilizing their space, because they have a bigger network. They have network with angel investor groups, so they can actually represent you better with utilizing their network with those angel groups. And of course, it makes a lot of sense getting in touch with them in the initial stage.
Yeah, that's good. So the starting point is that. But what my question was, since we've already crossed that starting point
No problem.
in our
No
journey,
problem.
so can we still approach them?
Yeah. Anytime is good time, because because they don't. As far as I know, you are still bootstrapped and you don't have.
Yes.
You have not raised any money or something. So normally these studios, because they are looking for a higher capital, once you have two rounds or three rounds, then it becomes difficult to get into this studio approach, because then you can't offer them so much of equity, no? But when you are in the initial stage of your project, you very well can offer, if they are actually giving you good money, so you can offer them maybe 30% or whatever, no? So that is why the stage at which you are, it is not a time that you have lost to approach them. There can be a good use case if they actually understand your project. Definitely, you can approach them. Yeah.
Good. And is 30% like benchmark a minimum, or is it still?
It's a journal. It's a journal tendency. So of course, equity sharing is always negotiable. No, it's a two-way track. How much you are able to convince them, and how much money you get from them, and accordingly you offer them the equity. Yeah. Yes, Biswajit.
Wonderful. Thanks for the clarity.
Yeah, Biswajit wanted to say something.
Yeah, Rajiv, apart from providing the infrastructure and all the networking and all the facilities you have mentioned, do they also participate in investing? Do they also
Yeah.
money in?
Yeah, of course. This equity is not given to them just like that. They become co-founder kind of because if they understand your project and they feel that the idea is very catchy and very unique, and it's going to make some disruption in the market, definitely they will jump on it. And so for them also it's a advantage, because they have that broad management expertise. They have that fund which is available with them, so they can make the founders sit in at one premises. So for them, they may be working on 4 different startup projects, right? So you are becoming part of their overall. So they become like a holding company having many subsidiary companies, no? And all of them are functioning in one place where all collective ideas, collective space utilization can be done, like in a co-working space, common meeting rooms, common places can be there, common pantries can be there. So all those things can be utilized. That's the basic concept of a studio, and they of course invest in these startups.
So basically, you are trying to say is they are investors with value-added services, right?
Absolutely.
Thank you. Thanks.
Yeah. Okay, so I think we all understood the concept. Let's explore it more. The startup studios are basically capitalist. I think this slide answers your question also, Biswajit, because they have venture capital to and also they are in touch with various venture capital companies, and they simultaneously work with many startups, and of course they demand equity in return of these services, but they work with goals which are different from incubator and accelerator. They become a partner and a co-founder in the project, and they are actually looking for working with the startups in a cohesive way. So it's a win-win situation for the studio owners as well as for the startups, because the studio owners, they get money, they get the startups working under them, and the studio participants, the startups, they are there to get a benefit out of it. Yeah, please. Anybody else? I think somebody raised the hand.
Hello, sir. Actually, good morning.
Yeah. Hi,
Yeah, actually, hello, sir. Actually, this is continuing on this side. Actually, I just work as a software engineer, right? And it has been around 10 years actually in the IT industry that I've worked so long. But the main thing is that actually the things are actually different now, right? Suppose, I mean, being a techie, I have the ideas, but I don't have the company experiences. So my questions would be naive at this stage, very much naive actually, because I don't have experience from the management side. The first thing that I just want to know that actually, are there any risk that would be, that the startup studios, accelerators, they would actually come across if they accept any of our ideas? Would there be any risk for them as well?
Of course, all the founders, they carry the risk, right? You may be having a very brilliant idea, but that idea may or may not work, or that idea is already being implemented in the market, and you are not aware, that's it's already there. Sometimes people start working on a particular idea, and after working for 1 year, they realize that that this is a similar startup in the similar space. So they are my direct competitors. So like that, these startup studios, they also, when you go to them with the idea, they judge the idea, they analyze the idea, and also they evaluate. And when they feel that, okay, this is an idea which is very unique and very catchy, and this will definitely work, they co-invest with you. So if you are having a co-investor, that co-investor is also risking their capital, money, everything, on the project, like you are actually putting in your hard-earned money or time or whatever, right? So definitely they participate in the risk as you are participating.
Right. So let's say actually another question. It would be a valid one, but I'm actually very much eager to ask.
Yeah.
Let's say that I don't have any experience in customer handling, right? I don't have any experience in actually judging that actually the ways in which the customer handling or the experiences should be handled, like in the management side or in the bigger corporate companies, right? Because I'm a techie, so I don't know that stuff. So in the provisions that the chart that you have shown before, in the actually as a comparison between accelerator, incubator, and studio, in the provisions, would there be any mentioning of customer experiences and actually how to evaluate the customers as they come on board on our on our platform? Let's say I just built a platform. Being a techie, I'm just actually raising all my questions. And actually, I just built a platform, right? Which actually have a subscribers of around 10K. Right, 10K, suppose in a month, or actually in 6 months, right? So would that be a valid stage, so that the startup studio or any stuff like that can actually think that actually we can help this platform, and we can actually help this guy or this startup to actually handle things with the customer experiences, because they don't understand it clearly. So if I just talk about the provisions, then customer experiences along with networking and the kind of asset management, should I say, right? So would this thing be considered as well? Because definitely I would need some help from the management side, right?
Gagan, that is where these studios come in handy, because I understand I work with a lot of techies. The basic challenge you guys have is that you don't have expertise in the financial side, you don't have expertise in the compliance part, you don't have expertise in the commercial handling of the customers or CRM management or something like that. So that is where these studios come in handy. They not only provide you space, they not only provide you opportunity to brainstorm and work on your project at a particular location, but they also provide you that kind of commercial expertise, because they have experts in all these areas sitting at one location. Now imagine a big corporate house, right? Normally the way these corporate houses work, they have a CFO, they have a chief operating officer, they have a CEO, right? And then they have multiple businesses, right? Take an example of Tata Group, right? And now Tata has one guy who's a chairman of Tata Group, right? Apart from Ratan Tata, let's look at the structure they have. And then below the chairman, there are a couple of companies, right? Each company has their own CEOs. Each company has, but they have a combined group CEO, group CFO also, right? So there's a group structure, then there are company structures, and then there are different people who are working in those structures. So the company setup management has a role to play to make that company successful, profitable, and whatnot. But the group also, group CFO has a bigger role to play to make sure that the entire group functions, right? So similarly, in the studio, you get these kind of people who are sitting there managing different startups, helping different startups. And they are doing it not as a person who is just helping, but as a co-owner, as a co-founder, right? Because they have also put in money, and they own, as I said, 30 to 60% of the stake in the company. So it's their stake. It is their challenge also to make it successful. So you are in a way, getting into a partnership with someone who is having interest in making you successful, right? And giving you all those resources. So that is where I think these startup studios come in very handy. And the people who are, because one is you launch a startup, other is if you have expertise, if you have money, if you have resources, why launch only one startup? Launch a startup studio, right? And have many entrepreneurs working with you, and participate in their growth journey and make it a bigger a group of startups working together. So that's what Startup Studio is all about.
Okay, cool. Thank you, sir. Thank you.
Yeah. So you can get in touch with me, Gagan. I think you are not part of the WhatsApp group. So
yeah, not yet.
Yeah, so do leave your number, and I'll also put my number in the chat. So let's connect otherwise also, so that whatever your further questions will be, I'll be happy to answer.
Sure, sir. Thank you.
Okay. And let's move forward. So we were discussing about this the capital investment by these studios. So venture capitalists play a role of an investor, whereas startup studios are more like investing co-founders. I think this is well understood by us. Now, besides providing money and guidance, they get fully involved in the business operations, and they are like a co-founding team. Also, there are various tried and tested tools which they have through past experiences, because they are all experienced guys, which they offer to the founders. Whereas the VCs only fund, guide, and help them with the networking. The startup studios actually get into the business, and although a lot of VCs also have an entrepreneurial experience, but again, that's limited to top tier VC firms. The entrepreneurship which is there in the studios is different. So the time frame, let us look at. Investors normally have a 10-year horizon, whereas in entrepreneurs, they don't mind waiting. So stage of joining is when idea or even the product is ready, you can go to the investor. For getting a startup studio or entrepreneur joining you, only a catchy idea is required. So I think that works well. Now, let us look at the characteristics of a studio. They are, it's a very new concept. It's not easy to understand and separate them. And that's why I think there are a lot of questions. but I believe I have made it very clear through that chart that how they are different from each other. So startup studios work from ideation to exit of the startup, and they build startups ground up. Whereas startup building is a repetitive process for them. So they are a startup factory, so to say. So so they are not only working on one project; they are working on multiple projects. So they are actually aware as to how the startup ecosystem works. Who are the investors? If it is an agri-based startup, who may be the best person who invest in an agri startup, who is the right person to approach, and also they have built multiple prototypes, business models, products, and companies simultaneously and in quick succession. So the startup studios develop their internal infrastructure in due course. They also have management know-how, data, and technical tools, and organizational strategies tailored through their past experiences. And they keep adding to this infrastructure to give best of the services to the people who are actually utilizing them. And of course, they are the people who are very much in demand. So I think the startup studios, we all know that they are the ones who are going to, give you that kind of broader view. So they have experienced entrepreneurs, professionals, industry veterans who are actually establishing that studio. There are sometimes large corporations also who start these studios to help developing their vendor network or developing their supplier network, and of course helping the ecosystem. And they know that they have a capital structure, business process they are very much aware of, and they have expertise into building companies which might benefit the projects and consolidate their position in the industry. And the process followed by them is ideation. Of course, they select new problems and solve, brainstorm on the new ideas. And of course, they deliberate on them, and they get sometimes ideas from outside entrepreneurs also. And there is a validation of the overall ideas. So they check the scalability of the idea. They do the market research. They do some pre-design testing on them. They have internal screening mechanism for checking those ideas. And when idea pass the test of the startup studio, they can start working on them. And they work with the founder to fine tune that idea. And sometimes they don't have any innovation bias. Sometimes the founder is too emotional about their own idea, his or her own idea. So these they act as a validation tool also, because studio guys, they have their own experience, so they can judge whether this is going to work or not. So also there is a creation. So startup studio have to convert the validated ideas into working business. So they develop prototypes and make improvements in them by leveraging customer feedback. And also they formulate business plans. And if they fail, they either need to start the creation step again or drop the idea. So they are kind of partnering with the startup to make sure that the whole thing works. They are also helping in spinning out. When startup studios succeed in creating a business, they let them spin out and work on their own through their own support teams and executives. It may be part of the studio or hired from outside, depending on the situation. And in case of a corporate startup studio, executive teams are usually part of the studio's internal team, and they help in scaling up. So when the business is ready to work, they raise funding, they start working hand in hand with the studio, and also get involved, in the helping them or helping the board to expand their business, and also they help in exit. Ultimately, some businesses are built for exit only, so they help in that also. So in exchange to all this capital, resources, and expertise, startup studios demand their equity. And since they are much more involved than accelerator and incubators or VCs, that is why they expect a higher equity. And they also integrate these projects with their own studio. So what is the startup studios operating model? Their working model can be a builder studio or an investor studio. So builder studio is the one that develops companies from internal ideas. It decides on problem to solve, comes up with a solution, validates it, creates a working business out of it, and then the business is spin off and functions through its management. There are some examples of builder studios. These are all US. You can actually Google them: Atomic, Pointer Square Labs, Rocket Internet, eFounders. These are the builder studios. Whereas the investor studios are partners at early stage startup founders and provide them with adequate resources and expertise. So in addition to the investor studios, they are part of everyday operation of these businesses. So they work on the product development, recruitment, fundraising, marketing, PR, etc. So I think, Gagandeep, this answers your question more clearly. So that's how these studios operate. So so there are first co-founder studio model, where startup studios partner with the entrepreneur who has an idea, but they don't require the team, funds, or other resources. So they in exchange of, say, 50% of the equity, they validate the idea, fund the development of prototype, prepare the market strategy, build management plan, work on the product building, and of course they prepare for fundraising and recruit executives and support the team members. The entrepreneur stays as in the executive position like CEO or COO, and they choose, after fundraising funds, they spin out the studio and let them function on its own. So basically they work on validation, traction, and fundraising. And then the second co-founder studio model is they partner with a small startup with the team and business plan is ready. They help in carrying the venture forward. So even they create a MVP, gain traction, and are operating in a stealth mode. So startup studios actively work with them to build their product, execute business strategies. So normally, so they are not as much involved in the entire operation. So they get roughly 35% equity in exchange. So international examples to look for is Hangar, Expa, Timal. So these are all US based. India, this concept is catching up. So we will have more such examples coming in, and more names to talk about. As of now, it's a new concept catching up in India. So definitely, I have studied this in depth, and anybody who wants to set up a startup studio also can get in touch with me. I can help them work on this idea, but you must have funds and resources to do that. The Builder Outsource Studio is another model where early stage startups are ready with their team, market strategy, operational resources, business plan, and need help in building the product. So studio works with the team, design, build, and manage the product management. And of course, in that case, around 10% equity in exchange they ask for. Builder outsource model is Roca, Conceptor, Spark Foundry. They are all US based, but there are a couple of them in Bangalore also. I know a few of them. IKP is one of them. I can just Ajish, you asked for it. So, but that is again not a builder outsource studio completely, but yes, they are close to it. And the third co-founder studio model is the intersection between the first and second. Of course, it refers to collaboration, where the original startup is ready with its own team, idea, vision, and network, and studio helps the product to design and develop those and give them technical assistance and marketing, PR, and all the other support. And of course, work as a technical co-founder. So these startup studios, the question which will coming to your mind is from where they get their capital. They also get capital from VCs also, and they also raise funding for making a studio. So that's very much possible, and they can collectively then offer this money to the various startups. So startup studios are helpful in building, growing, and scaling the business. In US, 35% of Idea Lab companies exited through IPO, and 5% became unicorn, and 450 companies, they had their own traction. So like these statistics are very good for us to look at. So as you know, US is initially the market where the startups got all the success. Now it is the time for us to replicate those good models in India, and that is why we picked up this topic today to discuss the startup studios. And of course, it all depends. Now the question comes: is this the right choice for the startup? It depends on the startup, their situation, their vision. That you should go for it or not, because it really depends how much expertise you have for building the product, for PR, marketing, fundraise, and how much infra tools you have. And also, again, you need to select the right one, which is the right fit for you, because they should have their, your work culture and ethics should match with them, and your expectation and their expectations should align. So, but definitely it makes a lot of sense, and the startup studios will definitely help you guys to expand into the market quickly. So I thank you for joining. I'm open to questions, please. Any more questions? Ajish?
No, Rajiv ji.
Okay. Yeah, Biswajit, you said.
Yeah, Rajiv, thanks for all the info. Could you please guide me, like, what are the keywords I need to mention in the Google search? Because the keywords are mentioned in Even a co-working space is coming up. If I just punch in startup studios.
You say Indian startup studios. I think that will give you throw some names to you, and otherwise I'll pass on some information. I know I know of one in Noida itself. So, but yes, there are a couple of them in India now.
Great. Thanks.
All right. Thank you, everyone. I think our journey to learn and expand in the startup world continues. Thank you for all your support. Let us make sure that startup change leaders become a bigger community. So thanks for joining. Thank you very much. Thanks. Bye-bye.